Hello, everyone. My name is Dan Bossi, president of Ag Resource Company, joined by Dr. Bill Tierney, our director of research. And we're here to talk today about the differences in the agricultural landscape and how what the Fed has done in terms of currencies has made a difference looking forward. Now, Bill, it used to be just 15 years ago, let's go back to 2000, a mark within the line of sand, that we can look at the Black Sea, which was at that point exporting 4% of world grain. Today, they're up over 33% and rising each and every year. In my first 25 careers of being an agricultural economist, I never used to worry about currencies. That has changed dramatically within the last 2 or 3 years. Brazil used to export 15 years ago no more than 19% of world soy. Today it's up over 55%. And I should say that's combining Brazil and Argentina. So the value of the real and the value of the ruble is something that the American farmers never thought about. Should they be thinking about it, or what's your vision, or how has this all changed?
Well, economic theory says that anytime a country's currency depreciates, if you change nothing else, you decrease the competitiveness of any countries that are trying to import or export to that country. So if you're trying to sell cars or aircraft or computer parts to Brazil or Russia, you're going to see your sales drop because your product's more expensive. Conversely, any products that those countries export, whether it's agricultural products or whether it's raw materials or even manufactured goods, they will see an increase in export activity. So in the case of the Black Sea countries whose currencies have depreciated to near record levels, in the case of Brazil and Argentina, their currency is at a record low level. Brazil is approaching their record low level. You would expect that if you change nothing else, they're going to be able to increase exports because their exports have become more price competitive because they have the advantage of a falling currency.
Well, this creates a real problem because as we think about extra production, the currencies of other countries, which are primary importers, are also going down in value. Let's say a Turkey or those countries. And so we're looking at world corn and wheat trade, being down for the second year in a row. And so as we come off the biofuel boom, we now have slumping world trade of grains. Mm-hmm. And I guess, are you concerned at all that?
Not really. If you go to the USDA's Economic Research Service, they have a database of what they call income and price elasticities. Now, what you were talking about was price elasticity. If a country like Japan sees their currency decline relative to the dollar, if a country like Korea, Taiwan, or China, because their currency has now started to go down relative to the dollar, will they, because they see dollar priced assets going up, will they purchase less because the price has gone up? With respect to the basic agricultural products, the crops that we're talking about, there's very, very, very small price elasticities. So generally speaking, the biggest impact that you're going to see from a currency change is not so much that countries are going to be importing less of these commodities because they're priced in dollars and they're more expensive because their currency is going down. The big impact is countries that export the commodities are going to get a stimulus to increase production. And what we've heard from the Black Sea is that Black Sea producers are planning to expand production. What we've heard from Brazil is that Brazilian farmers are planning to expand production. So the theory is being confirmed by the fact that in the countries that are seeing very sharp declines in currencies, we're expecting increased agricultural production in the next production cycle.
Boy, that doesn't land very well for the U.S. farmer.
Well, Dan, at least U.S. farmers aren't looking at a double whammy. They're not looking at a decline in demand because the value of dollar-based products, commodities is going up. But what they are looking at is our competitors are in all likelihood going to increase production.
And boy, we are sure seeing that in Brazil and at least for new crop winter wheat seedings in Europe and Russia. Dan Bossi, Bill Tierney joining you, of course, here from Ag Resource in Chicago. Thank you very much.